Okay, so today we'll be talking about pips and lot size. A lot of people have been asking, how do I count pips? How do I count pips? And I get to know more about lot size. Okay, so we'll be having that class today. I'm going to break it down step by step using whatever happened around us to give a clear concept and a clear meaning of what pips is all about. I would advise to pay attention to the information so you can properly understand how it works. Remember, pips and lot size is one of the most thing you use when it comes to trading, right? After your analysis and everything, you want to know the number of pips, risk, and the number of pips reward, right? You also want to use a lot size that will also determine the amount that you're risking from your account, right? So pay attention. If you're new to this channel, kindly subscribe to my YouTube channel. Please click the like button and the follow button, right? To enable me do more of this content. All right, so let's dive into it. So let's start with what is pips? What is pips? What is pips? A lot of you might have known. You might have known what pips is. What is pips? What is pip? So some people call pip smallest price movement. A lot of definitions. So let's see in a short meaning, pip is smallest price movement price movements in the markets, right? Pips is what's the smallest price movement in the markets. A lot of people know pips as this, but then I would want to like explain it in another meaning, right? Now, what is the one other thing apart? There are so many. What's one other thing that makes or that give people that idea that a market has been buying for a long time? One thing that gives people that idea that a market has been buying for a long time is called pips. Take a pips as a number. Take it like a number, right? Take it like a number that counts from 1, 2, 3, 4, 5, and above, right? If a number is being adding one, if it is being adding value like from 1, 2, 3, that number is increasing, right? Is increasing in what numbers? So imagine you're moving to somewhere, you're stepping out from the house and you start counting your step, right? You start counting your step from your house. What does that mean? Right? It means that you're moving ahead, right? Take it like that. Don't take it too serious. For the people who are finding it difficult, it's not difficult. Just pay attention to this. Now, take it like number that counts, right? Number that counts from 0 to like 1 million, right? Now, this is where the pips is being located on the TradingView app or in the TradingView app, right? If you also log in your MT5, you will also see for each pair, you also see the pip by the side, right? Now you can see the pip number. You can see how these numbers, the numbers we have here, right? Now imagine on the overall of the market move, this is the level that the market has got into. It means that it has started from 1 all the way to 37,340 move. Imagine somebody is moving ahead, you're moving forward, counting the steps. You've walked over 37,340 steps, Now, that is what it means. It means that in the overall, in the history of the market, this is the highest level the market has moved to. That's what it's simply telling you. Now, it can also drop from here. As it's dropping from here, look at that label. Look at that label from the cursor, right? Look at this label right here. As I'm taking it down, you see that it's reducing. It's reducing. Now imagine the market is dropping lower, right? It's dropping down. You see the number, that pips number reducing. It's reducing in what? In value, in numbers, right? So that is what it means. That's how to understand it. Now, how does this thing count? How does these numbers increases? How does the next number increases? Now take it like you have a wall clock, right? Now let's do this practical work together. Now imagine, just pay attention to this. You all know this. You have it on. You have your wristwatch. You have your wall clock in your home and the rest. Now, this long indicator, right? What does it count? You know, it's seconds, right? Now, the next one that follows it is this, right? What does this also count? You know, it's minutes. How about this? Hours, right? Now, this that counts seconds. If you start counting from 0, it's going to count 60 seconds, right? Good. 60 seconds all the way to this point. So is it going to start 61? Obviously no, right? It's going to start back from what? 0, 1 back, right? 0, 1 again, 60 seconds, 0, 1 again, 60 seconds, right? That's how it counts. Now let's get to this, the one that counts minutes. It also starts from 1 minute from here, 0 to 1 minute, all the way to what? 60 minutes. Pay attention to the details. 0 to 1 minute to 0 to like 60 minutes. From 0 back again to 60 minutes. To 0 back again to 60 minutes. So it's not going to count 61 minutes. Right? Now let's go to the hours. The hours start from what? 1 hour all the way to what? 24 hours. Now, why is this? Why am I using this? Now, note one thing for sure. That these indicators they all have a relationship with each other. For this 1 minute, for this to clock 1 minute, this has to move what? 60 seconds for this to clock 1 minute. If it wants to move another minute again, it has to move 60 seconds again, right? Now, for this hour indicator to clock 1 hour, this has to keep moving 60 seconds, and this has to move what? 60 minutes. This has to move 60 minutes for this to clock 1 hour. Remember, listen again. This one has to move 60 minutes for this 1 hour to clock 1 hour. You can see the relationship with each other. Now, why am I using this? If you look at these pips right here, first of all, this is a clear concept of how these pip things count, right? Now, if you look at this pip right here, the numbers are increasing, right? Each of the figures right here, they keep changing. They keep changing, right? Now, how does it change? Now, it's not going to count 60 seconds. Like I said, it's a clear concept of how this pip thing works using this clock. Now, this one counts 60 seconds, but in the pip's own, it is 10 move, 10 step. If this can count 60 steps, this can count 60 steps, right? This one here, you have it in 10 steps for the next number to change. That means if the market is moving, is appreciating, is going up, this first number here has to move 10 steps for this to clock 1. If you keep moving, it has to move another 10 steps again for this to clock 2. You keep moving 10 steps for this to clock 3. Just that way. This same, for the next digit right here, the next digit to clock 1, this has to do the same thing. 10 steps for this to clock 1, 10 steps for this to clock 2, 10 steps for this to clock 3. You guys getting that point, right? So now let's go in again. If this is clear, I believe this is clear. So now, how do we now know 1 pip, 2 pip, and all the rest? Now, first of all, we have different formation of PEEP, how the PEEPs are being formed, how the PEEP operates, or let's say formation of it in different pairs. Now, some of them are in 4 decimal places, right? And some are in what? 2 decimal places. Now, what am I trying to say? For the ones with like the major currency pairs, I believe you must, for you listening to this, you must have learned about major pairs, minor pairs, and the types of pairs, right? Now, when I mean major pairs, the ones that are most tradable, right? So let's say we have a major pair with, let's say, 0.12345, right? Good. Now, let's say we have a pair with this. How do you now know 1 PEEP? How do you know 2 PEEP? How do you know the rest? Now, the first figure right there, when it move 1 step forward, it becomes 1 PEEP. When the market moves 2 steps forward, it becomes 2 PEEPs. When it moves 3 steps forward, it becomes 3 PEEPs. 4 steps, 4 PEEPs. 5 steps, 5 PEEPs. All up to 9 steps, that is 9 PEEPs, right? That's 9 PEEPs. Now, the next one that is going to make it 10 PEEPs, we automatically turn this to what? 0, and this becomes what? 1. Automatically, you have what? 10 PEEPs, which means the market has moved 10 steps ahead. Let me put it there again. Let's say this is GBP USD, right? Now, it means the market has moved what? 10 steps ahead. Remember the clock. Now, we want this to turn into 20 steps again. What will happen again? This has to clock another 1, making it 11 PEEPs, 12 PEEPs, 13 PEEPs, 14 PEEPs, 15 PEEPs, 16, 17, up to 19 PEEPs, right? 19 PEEPs. Now, for the next number to change to 20 PEEPs, another 1 PEEP needs to be added to this, making it 10 PEEP, right? Automatically turn this to 0, and this becomes what? 2. You have 20 PEEPs. It is how simple it is. This will keep doing this, changing the figures right here. So now, one other way to make it very simple for yourself is sort of counting. From the first one, you have from 1 to 9 PEEP, right? From the second figure, you have from 10 PEEPs to what? 90 PEEPs. 10 PEEPs to 90 PEEPs. Now, the 100 PEEPs start counting from the next 0. From the next 0, you have 100 PEEPs. Now, 100 PEEPs to what? 900 PEEPs at the third 0. Now, from the next one, you have what? 1,000 PEEPs. This is how it counts. Now, it means this market has moved 1,000 steps forward. Now, the ones with 2 decimal places, this is how it looks like. You have digit like this, and then what? The decimal point and another numbers. Now, these ones are like the Asian pairs, right? These are like the minor pairs, right? Now, how does this also work? Right here, you have your 1 PEEP, 2 PEEPs, 3 PEEPs, 4 PEEPs. That's 4 steps forward, right? From here, you have your what? 10 PEEPs. Now, it means market has moved 10 steps. The same way is adding in value. It can also reduce when the market is going down, when it's dropping. So from here, you have your what? 10 PEEPs, 20 PEEPs, 30 PEEPs, up to 90 PEEPs. Now, the 100 PEEPs automatically start from where? From here. This is your 100 PEEPs. Now, this is how to know to count PEEPs based on the currency pair. Now, let's talk about gold. How does gold PEEPs look like? How do we count it? How does it look like, and how do we understand how to count it. Now, pay attention to it. Now, for the gold pip, it's totally different. The formation is totally different. It's not like how these are, right? No, like how these are. Now, this is how gold pips is. You have 4 numbers, right? A decimal point and what? 2 other numbers. This is how gold pip formation is, right? So where do you start knowing 1 pip, 2 pip, and the rest? Now, from the next 0, this becomes your 1 pip. Here, 2 pips. Here, 3 pips. Here, 4 pips, 5 pips, up to 9 pips. Now, where do you start having your 10 pips? Automatically, this turns 0, right? And then here you have 10 pips, 20 pips, 30 pips, 40 pips, 50, 60, 70, 80, 90 pips. 90 pips right here. So when you have another 10 pips added to this, automatically here turns 0, and then you have your 100 pips from here. 200 pips from here up until 900 pips. So where is your 1000 pips starting from? From the next 0. This is your 1000 pips. This is exactly how to know pips increasing in numbers for gold. Now, if you look at gold, you see that gold has moved over 5,000 steps ahead. Gold has moved. So let's continue. Now, how much, this is where the money is. The money you're looking for is in these numbers. Now, how do you now know the amount that you make per pip move? How do you know the amount you make per pip move? Right? So, how do you know the amount you make per pip move? That is where we have what? Lot size. That's where we have what? Lot size. Now, the money you make, the amount of money you make, and what again? And the how do I put this? Sorry. The amount of money you make depends on what? The lot size. The amount of money you make depends on what? The lot size you use. Now we have what? 3, we have majorly 4, but the 4th one is not traded in currency pair. So we focus on 3. So we have 3 types of lot sizes that determines the amount of money we make or we lose. So 3 types of lot size. Three types of lot size. Now, the first lot size is called standard lot size. Which is equals what? 100,000 units. It equals 100,000 units. Now, for the mini lot size, it is equals 10,000 units. For the micro lot size, it is equals 1,000 units. These are the 3 types of lot sizes we have: the standard, the mini, and the micro lot size. Now, for the standard lot size, it is equals what? 100,000 total units. That makes up what? One standard lot size. For the mini lot size, 10,000 total units makes it up. For the micro lot size, 1,000 units, right? Now, this total unit you're seeing here, it is equivalent to what? This total unit you're seeing in the lot size for a standard, it is equivalent to what? $10. $10 per pip. $10 per pip, right? Now, for the mini lot size, it is equivalent to what? $1 per pip. $1 per pip. Now, for the micro, this is equivalent to what? 10 cents per pip. 10 cents per pip. Now, what does this mean? For the market to move, let's come back here. For the market to move one step, that's 1 pip. For the market to move 1 pip in your favor, let's say you are buying a market and the market is moving in your favor. For the market to move 1 step in your favor, if you're using a standard lot size, which the lot size is starting from 1.0 to what? To infinity. You know, when they say something is infinity, which means you can use any number right here. You can use 100, you can use 1,000, you can use 2,000, you can use 3,000, you can use any amount as long as your capital can accommodate it, right? So this 1.0 lot size, which is a standard lot size, how much is this lot size? It is equals $10, right? $10 per pip per move. So once you're in for a buy and the market is going 1 step in your favor, you're making $10 in your account. $1.0 equals $10 per pip, which means markets move in your favor. You either make markets move either your favor or against you. You either make or you lose $10. The same way it's going in your favor and you're making $10. If it's going against you, you either be losing or you're making $10. Do you understand? So this is how this pip thing works. This is how to know the amount you are making. The amount you are making per move, per pip from your balance, from your account. Now, let's go to mini lot size. Now, for the mini lot size starts from, let me identify it here. Mini lot size. Here you have standard lot size. Now, for the mini lot size, it starts from what? 0.1. For the mini lot size, it starts from 0.1 to what? To 0.9. So if you're trading between 0.1 to 0.9, you're trading the mini lot size. So how much is this 0.1 worth in dollar? Now, 0.1, it is equals $1 per pip. 0.1 is equals $1 per pip. You can see the difference. Now, what does this also mean? If you enter a trade either for a buy or for a sell, let's assume you enter for a buy and it's going in your favor, one pip. Remember the pip. Let me bring it down. Now, this goes 1 pip in your favor, you make $1. 2 pips in your favor, you make 2 times of $1. That's 2. 3 pips in your favor, you make $3. 4 pips in your favor, you make $4. 5 pips in your favor, you make $5. 9 pips in your favor, you make $9. That's how you make money from it. Now, the more you increase your lot size, the more you double the amount you're risking. So imagine you're entering the trade again with like 0.2 lot size. That's mini lot size, right? 0.2 lot size. That means this lot size is now doubled. If you're entering, if normally you're entering with 0.1, which is equals $1, once you increase it to 0.2, your pip move becomes $2. The amount you're risking from your account becomes $2 per pip. So if the market moves 1 pip in your favor, you make $2. 2 pips in your favor, you make $4. The same way for standard. The more you increase the lot size, the more the amount you're risking per pip increases. Now let's go to micro. Micro lot size. Now, micro lot size starts from what? 0.01 to what? 0.09. So if you're trading between 0.01 to 0.09, you are trading a micro lot size. And the 0.01 is equals what? 10 cents. 10 cents. 10 cents per pip. What does this also mean? Price is moving 1 pip in your favor with 0.01, you're making 10 cents per move. 10 cents per step, either in your favor or is going against you, 10 cents per step. This is how simple it is. The more you increase the lot size, the more the amount you're risking increases. Imagine you're trading with 0.09, that is 90 cents per step. And like we said, this is where the money is. All you have to do is manage so you don't exhaust your account. Because as markets keep going against you and then you're losing $10, assuming you're trading with standard, you're losing $10, and price move against you for like 10 steps, your $100 capital is gone. Are you following? Now, let me rephrase that. Imagine you have $100 as your capital. $100 as your capital. And then you enter with what? One standard lot size. And price is now going against you. Now, as price is going against you, you are losing $10 per move against you. How many move is going to cost you $100? 10 move. That's 10 pips against you, $100 is gone. If you have $200 capital and price is going against you, 10 pips per move, 20 pips per move, $200 is gone. So risking 1.0 lot size, which is one standard lot size for $100 or $200 capital, is not a good risk. This is a business. You have to treat it like business. Know the lot size that's going to suit this amount so you don't blow up your accounts. Because if you keep using a bigger lot size, yes, the risk is high. The reward is also high because you also make $10 per move, per pips. But then if price keep going against you and you keep blowing your account, now answer this question. Think about it. For how long do you think you keep depositing money and then you now realize that you've deposited a lot and you're not gaining anything? No matter how much more people say, no matter how much more you're being told that you will keep blowing your account for you to get better in the process, there will be some time in your life that you feel like nothing is working because you've lost a lot. So if you keep doing the wrong thing, you keep getting the wrong result. We following? So now let's do a practical example. Now imagine that I call a trade. Imagine I call a trade and I say buy. Imagine I call a trade and I say buy GBP or buy Euro USD. Buy Euro USD, and the entry level that I gave, you're buying at, the entry level I gave is 1 point, let's say 1.1 thousand. 1.1 thousand, you're buying at exactly 1.1 thousand. And the price, let's assume you now bought, right, at this price level, and price now move 1.100, let's say 50, 1.10050. All right, this is it. Yeah, this is now 1.10050 in your favor. This is just for instance. Now the market move 1.10050 in your favor, and then let's say you're entering with a lot size of 1 standard. You're entering with a what? No. Let's do it this way. Now imagine I call a trade and I say buy Euro USD at buy Euro USD at 1.1 thousand level, right? This is the level pips, the price, the level the price has gotten to, right? And the price now move the price now move 50 pips in your favor. Now let's now compare the both prices. How much you're going to make on a standard lot size, how much you're going to make on a mini lot size, how much you're going to make on what? A micro lot size. So let's go. So your profits. So let's start with micro lot size, 0.01. How much am I going to make on micro lot? So it equals what? 50 step. 50 step the micro lot. How much is the micro lot? You all know, right? Micro lot is 10 cents, right? 10 cents. 10 cents per pip, right? So how do you do this to know the total amount you have made on this trade? All you have to do is your 10 cents, 0.10 times 0.10 times the 50 pips price has gotten to. Let me put the sign here so you know that this is the amount price is moving per pip. Right? Now, 0.10 times the 50 pips move will give you how much? Point the calculator and then let me know. Good. All right. I believe you must have done that. So what is the answer? $5. Now price move $5. Price move 50 pips in your favor, right? Price move 50 pips in your favor, you make $5 on 0.01 lot size. Very small, right? Now let's go to the next type of lot size, mini lot size. Mini lot size 0.1. How much is this 0.1? $1, right? $1. Now, how much am I going to make? How much are you going to make in total with this same 50 pips reward, right? 50 pips in profit, 50 pips in your favor. How much are you going to make? What you're going to do is simple. The $1 that your price is going to be giving you per pip times the 50 pips in your favor. How much is this? $50. Now it's the price, the profit is making sense, right? Now price move, you entering with 0.1 mini lot size, which is equals $1 per pip move. With a profit, with a reward of 50 pips in your favor, you make what? $50. Now let's go to standard lot size, or standard, which is starting from what? 1.0, right? So we're using 1.0 also. This is equals how much? 1.0 is equals $10. $10. Now, how much is this $10 going to cost you? How much is this $10 going to give you with a total pips in your favor? With a total pips in your favor, that's 50 pips, right? So let's do this. Your $10 times 50 pips in your favor. How much is this? Punch the calculator for me. That means you make how much? I believe you must have done that. Good. 500. This is how easy this is. When you understand how this thing works, you know the kind of lot size that you risk from your account. Right? You can see the difference. Using a micro lot size, you make just $5. Using what's it called? Using a mini lot size of 0.1, you make how much? $50. Using a standard lot size, you make how much? $500. This is what you make. Now, you can make this same thing on what? On gold. It's still the same. You can make it on GBP USD. You can make it on Euro USD, as long as you're using the same lot size. I've been asking a series of questions that gold move very fast, that the amount you make on gold with the amount you make on GBP USD is different. It's a lie. Gold move fast, we understand, but the volatility of gold will make you hit 50 pips in profit faster than the one of GBP USD or Euro USD, but you make the same amount. So if you're entering gold with 0.01 lot size, in 50 pips in profit, you also make what? $5. If you're entering with what? 0.1, which is mini lot size, in 50 pips in profit, you make how much? $50. The same way right here. The only difference is that gold volatility is too high than currency pair. That's why you make that amount very fast than the currency pairs. So it's still the same, right? So doing this now, I want to give you guys. If you're watching this, go and test yourself. Go and give yourself a practical work. Give yourself maybe like 100 to 200 pips in profit. Calculate it based on the lot size you want to use, right? Based on the lot size you want to use, and then you know how much that is going to cost you. You know how much it's going to cost, right? Now, this is the one in what is it called? In your profit target. Now, let's talk about the risk level also. So let's assume that this same trade you're entering, your risk level, let's say you put a risk level of like 20 pips. 20 pips. And what does this mean? That if price is going against you and then hit 20 pips, you're out in that loss. Now, because you have a capital of like, let's say 300, because you have a capital of like 300, doesn't mean when you enter a trade, you're chasing a particular pips that you shouldn't put a total risk level. your account will just go, because once price go to the total, based on your lot size, to the total amount of pip against you that will exhaust this 300, you're out in loss. So as a trader, you always look for a means to do what? Protect your capital. Now that's why you have to reach a certain percent from your account. Now, let's say you're entering you're entering this particular trade with what? With $300. And then your risk level is what? 20 pips, which is this. This is your risk level. And then you're entering with what? 0.01 lot size. Now, let me use this. Good. Now, this is your long position and your short position too. Okay, so let's say 20 pips. This is 20 pips. Right here. Good. You can see it right here, 20 pips, right? And then for the reward, we are done with that reward. So we are focusing on 20 pips. Now, what does this mean? Now, when price, this is your entry level, right? When price start going against you and price hit this 20 pips level, it's going to take you out on any loss that you've incurred during that time. It's going to take you out and reserve the remaining balance to your account. If it's also going to your favor, as price gets your entry and start going to your favor, you start making the pip profit, right? So that's what it means. So from here to here, all you have to do is the same lot size that you're using to enter the trade, which is equals 10 cents per pip. You're going to times it by the risk to know the total amount you're risking on this trade. So let's say on this $300 capital, how much is 20 pips going to take you using 0.01 lot size? So all you have to do simple is your lot size amount, which is 10 cents, times what? Your lot size amount, which is 10 cents times your pip risk, will give you the total amount. Are we following? So how much is this going to cost you using this 20 pip risk with this lot size? It's simply, let's do it together. Let's do it together. So 0.10 cents times 20 pip risk. 20 pips risk is going to cost you $2 from your account to make $5. Right? We've done the calculation here for the reward part, for the 50 pips to make $5. Now imagine taking $2 from your 300 and then you make $5. The same thing right here. All you have to do is calculate the mini lot size amount times the risk. Doing that, you know the mini lot size is $1. $1 times 20 pip risk, that's $20. So it's going to cost you $20 if the market drop against you using mini lot size. But then if it goes your way, you make $50. So you use $20 to chase $50. Now this alone will help you balance your emotions. Now, a lot of people go in with different lot size that at the end of the day, they start having this fear, panic attack when price start going against them and they start losing big. It's because they don't manage what they risk. They don't manage their risk. They don't manage their risk. It becomes a problem when price start going against them. But then at the same time, if it goes in their favor, they make big money. But if it goes against them, account gone. So you have to apply risk management. You have to apply risk management to your trading. You have to know what you're risking by understanding the pips and what lot size. I believe this video is helpful, right? If you do not understand it, I will advise you to do what? Rewatch it again. Rewatch it, right? Rewatch it so that you can understand it better. Now, before we call it a day, let's dive into what? The chart. Let's dive into the chart. Now, imagine that I want to trade this is GBP USD you're seeing right here. Now, imagine that I want to trade this GBP USD and I'm done with my analysis and I'm targeting, let's say I am targeting this, okay, this is, okay. Let's say I'm targeting this level as my reward. I expect price to do what? to push all the way, come to this point, give a retracement and push back to this level, right? Let's say I'm expecting price to push to this level and I'm done with my analysis. I want to put in my long position. Let's say I am here, or this is my entry right here after getting this confirmation. And where is my risk level? My risk level is right here. And let me say I'm risking 20 pips. Let's say 20 pips. 20 pips, 20 pips, 20 pips. All right, so let's continue. So let's say 20 pip raise. So let's assume this is 20 pips. Ignore this 7. This is 20.7 pips, but let's focus on the 20 pips. And then how much is from here to here? This is 59 pips. Let's make it a round figure. Let's make it a round figure. I like round figure. 60.5. Okay, good. So let's say 60.5 is our target, reward target, and the risk is what? 20 pips, right? So if I'm entering this market with a mini lot size, that's 0.1, the market go against me, I'm losing $20. But if it goes in my favor, I'll make $60. Right? If it goes in my favor, I'll make $60. If I'm using a standard lot size, I'm using 1.0 standard. If it go against me, I'll lose 200. Or if you go in my way, I make how much? 600. The same way for micro. Now, if I increase my mini lot size to 0.2, now instead of me losing $20, I'll lose $40 because it is now 2 lot size, 0.2 lot size. I'm using 2 times of 0.1, which is 2 lot size. So $20 in 2 places, that's $40. That's what I'm going to lose here. And if it goes my way, this is going to be times 2 in my amount, in the amount I'll make. So I'll make about $120. This is how simple it is. Same way if you increase your standard lot size to like 2.0. Now instead of losing $200, you lose how much? $400 to make times 2 of this. That's over $1,200 you make. This is how easy it is. When you apply this concept, trust me, when you understand this, even though you lose money, you will not lose much. Do you understand? This is how it works. So thank you guys. I hope this video is helpful, and I hope you learned something or you learned something from it. If you enjoy this video, please do well to subscribe to my channel. Do well to follow up. Do well to turn on the notification bell, because more of these videos will be coming up.